crypto markets ended the week quietly, balancing between recovery and hesitation. Bitcoin traded between $112,000 and $114,000 after brief dips below $110,000, while Ethereum hovered near $4,000. Large-cap altcoins moved in step, showing the same measured rhythm that has defined trading since early October. Volatility contracted, liquidity improved, and the violent unwinding of leverage seen the week before has largely been absorbed. Across trading desks, analysts described the week as post-shock calibration. The heavy selling of the prior weekend cleared excess leverage and forced liquidations, leaving a cleaner structure behind. Urgency gave way to patience. Traders now test liquidity instead of chasing direction. Order books thickened, spreads narrowed, and volumes stabilized at levels typical of consolidation rather than panic. Macro conditions, while still relevant, lost some control over sentiment. Recent economic data reinforced expectations that central banks will keep policy steady through year-end. That backdrop, combined with a slightly softer dollar, supported risk assets without creating strong momentum. Uncertainty over trade relations kept conviction muted, and crypto continued to mirror equity markets more than chain-specific news. Structurally, the picture improved beneath the surface. Funding rates returned near neutral, open interest rebuilt, and derivatives premiums normalized. Analysts noted that forced leverage has largely flushed from the system, letting spot flows regain control of price discovery. This normalization lowers the risk of another cascade and allows direction to develop from real demand, not liquidations. Flows remained quietly supportive. ETF and ETP creations again outpaced redemptions, showing that institutional capital continues to accumulate despite muted retail activity. Such steady inflows after a correction have historically marked the first stage of base formation. Technically, Bitcoin's pivot at 112,000 remained the central reference. Consistent bids there preserved support between 105,000 and 110,000, while resistance held at 115 to 120,000. A sustained close above that zone would signal buyers regaining control. Ethereum showed a similar structure. Solid support near 4,000 but limited follow-through until confirmation arrives. Derivatives data framed the tone. Gamma exposure around key option strikes suppressed volatility as dealers hedged both sides. This pattern often defines the quiet stretch between liquidation and decision. As near-term contracts expire, implied volatility may rise again, freeing prices to move more naturally. Rotation across majors stayed uneven. High beta coins that led early week rebounds gave back small gains, while Bitcoin dominance edged higher. That rotation reflects a preference for liquidity over leverage, typical of consolidation phases. Cross-asset signals told the same story. Gold stayed firm, the dollar index stable, and equities cautious. The macro backdrop encourages balance but not aggression. Signs that stabilization is taking hold include Bitcoin holding above 112,000 with rising spot volume, flat funding and neutral option skews, ETF inflows exceeding redemptions, a calm macro tone without policy shocks. By contrast, renewed rejection at 115,000, heavier exchange inflows from large wallets, or a stronger dollar could reopen the lower band near 105,000. The message for the weekend is simple: the pause is part of progress. Markets evolve through rhythm, shock, balance, decision, and crypto now stands in the balance stage. Forced selling has faded, leverage normalized, and attention is returning to data over emotion. Whether this calm builds a foundation or proves a plateau will depend on liquidity, not headlines. Patience is preparation, not passivity. For more insights on Bitcoin, Ethereum, and the forces moving the crypto markets, remember to like, subscribe, and keep learning, here at Crypto in Black and White.